I'm Alicia Hyatt. I'm editor of Mining Markets Magazine, and I'm here at Scotia Plaza in downtown Toronto with Patricia Mohr, Vice President Economics and Commodity Market Specialist at Scotiabank. Patricia, we've seen some wild movement in the price of gold this year. It started out the year at $1,700, and it's now in the low 1300s. What's changed regarding the outlook of the price of gold?
Well, I think at the beginning of the year, investors started to realize that the Federal Reserve Board might start to reduce its quantitative easing, that is, begin to roll back its QE3. And of course, in recent years, one of the key developments really lifting gold to record high was the fact that gold buffs and gold investors believed that quantitative easing would be increased further by the Fed and other G7 central banks, and that ultimately, if sustained, would prove inflationary in the middle of the decade. So the idea that it might actually be scaled back now really is the key factor moving gold down.
So gold has been reactive to every bit of economic news, and we are expecting tapering into the fall. So what is your forecast into the fall and into next year?
Well, we don't know precisely when the Federal Reserve Board will taper its asset purchase program. That is the purchase of $85 billion per month of longer dated mortgage-backed securities and longer dated treasury securities. But we do feel quite strongly that it is coming. And I think although gold has lifted after bottoming, reaching a low just under the $1,200 mark, gold now trading about $1,327 an ounce in the middle of August. I do think that when the Fed does actually announce that it is going to taper its asset purchase program, I do think that gold could very well correct again, hopefully not below the $1,200 per ounce mark, which I think is probably going to be the bottom.
Gold peaked in 2011 at over $1,920. Are we going to see those kind of prices again?
You know, I think it's going to be quite some time before we see that peak reattained. Gold moved up to an all-time record high of $1,921 per ounce the day before a Federal Reserve Board meeting, and of course the gold traders were expecting the announcement of QE3. In fact, the Fed did not announce QE3 back in September 2011, and it didn't happen until around October 2012. So gold actually moved immediately lower when the traders and investors discovered that in fact QE3 hadn't been announced. So yes, gold is very sensitive to Federal Reserve Board policy.
So if we're not going to see much movement in gold over the next little while, are there any commodities that you do expect to see some upward movement in?
Well, I think there's a good chance for investors who are keen on the precious metals. There's a good chance of seeing much higher palladium prices. Palladium is a precious metal, usually mined in association with nickel or with platinum. It's used in autocatalytic converters as an environmental control on gasoline-driven motor vehicles. And so it's really a growth story that relates to the huge growth that we are anticipating in motor vehicle sales in China and India. And of course, in a country like China, there are only about 70 cars per 1,000 people. In the United States, well over 700. So there's huge potential for motor vehicle sales in China. And so far this year, motor vehicle sales have actually been rising at double digits. So I am optimistic that particularly once gold really steadies, we do see palladium moving substantially higher.
Thanks so much, Patricia.
Thank you.